Elliott wave theory versus market cycle. Elliott wave theory versus market cycle. Today we want to clarify the subject of market cycle in relation to the Elliott wave theory. Well, this financial instrument that we will use for this discussion is IBM stock, International Business Machines Corporation, and I'm on a monthly chart, okay? When we are talking about a cycle, so for instance, a yearly cycle will be from the 1st of January 2016 up to the 1st of January 2017. That's this 1 year a cycle, all right? So from the starting point to the starting point. So 1st of January 2016 all the way to 1st of January 2017, that is 1 year a cycle, all right? So if you are talking about a 10-year cycle, okay, from the beginning of 1990 to the beginning of the year 2000, we have 1 decade or 10-year cycle from the beginning to the end. So generally, what I want traders to understand, the first thing that comes into our mind when we are talking about a cycle is from the beginning, okay, to the end, where the end and the beginning is also equal, all right? From the starting point to the starting point. The horizontal line that we draw at that point, which is the origin and the end, is what we call a cycle point. All right, very, very important. So if you are in a financial market and you do not understand market cycle, you can be in trouble because there are hedge funds, banks, okay, smart money pay attention to market cycle. In this demonstration, I'm going to focus on IBM stock, and the IBM stock has a cycle of 10 years. All right, this stock is going up and down, okay, in a certain way during each 10 years. All right, so you may try to figure out the market cycle for a specific stock. All right, this is about market cycle. So I can look, for instance, for American Express, a market cycle. I can look at Intel stock, look for the market cycle for Intel stock, and the investors pay attention to those cycles. All right. Now let's put aside market cycle, and let's focus on Elliott wave cycle. All right. Traders that are following us already know what is an Elliott wave cycle. It is formed of the multi-wave, okay, and the corrective phase. In that case, the beginning is not always equal to the end, all right? So it's not from the starting point. It's not always, when we are talking about an Elliott wave cycle, it's not always from the starting point to the starting point. So which means sometimes the starting point will be different from the ending point. But we have an Elliott wave cycle, which is the trending phase that is formed of the first wave, second wave, third wave, fourth wave, and the fifth wave. That's the multi-wave or the trending phase, followed by the correction, usually ABC. So from the beginning of the trending phase all the way to the end of the correction, all right, that's what we call an Elliott wave cycle. Sometimes a correction can become a complex. Sometimes we may see a cycle that you see beginning of the cycle, multi-wave, 1, 2, 3, 4, 5, and then a correction begins, 1, 2, 3, or a flat correction, whichever correction that we see will take place, and people will think that that's the end of the correction. Then we have something that we call X, probably go up a bit. A new cycle may try to begin, all right, that will fail. What usually takes place that we call X is a cycle that has failed, in fact, because the correction has ended, but the price starts to begin a new trend, but that trend will fail. And then we have more correction taking place. Then we will say a complex correction. So an Elliott wave cycle is the multi-wave plus the correction. Remember that a correction can become a complex correction. It's not as straightforward as I put it here, 1, 2, 3. You may have some time a complex correction, which means instead of having the end of the Elliott wave cycle here, you may have it somewhere here. All right? All right? So, in order to forecast the financial market, this is the purpose of the Elliott wave, to forecast the market, the financial market, to know what is likely to take place, so we may take advantage of it. All right? So, having a bit of idea, okay, how the market will behave. All right? Because especially if you are a hedge fund, that is trading with your client money, millions of dollars. You are an investment bank trading with your client money, millions of pounds, millions of dollars. Okay, you want to have a bit of idea what is likely to take place in the financial market. So if you are trading, for instance, okay, IBM, you want to know the IBM market cycle, and also want to know the Elliott wave cycle that you are dealing with. All right. Okay, so this will help you, all right, to make better decisions. So if you understand the market cycle and the Elliott wave cycle, you can become a better investor. You may know, okay, this is the harvest time, this is the trending phase. Okay, now I can buy and hold, and you will be ready to take profit when the profit taking time is due. All right. So you may not criticize, okay, bearish traders when the market is going down, as we have seen from 2007 to 2008. The market was bearish. Everybody was blaming, okay, all right, the bearish traders. But the market does not go up forever. All right, be ready to buy and be ready to sell. It won't hurt you. Okay. So let's go back to the IBM stock, and I want you to pay attention carefully to what I'm going to do here, because I'm going back in time from 1982. Were you born that time? 1982? Okay, I was born. Okay, some of you may not be born that time. 1982 to 1994. That's okay. Call it. Call it 1982 to 1992. Okay, so I'm going to move my vertical line a little bit here. That's 10 years period. Okay, 10 years period. Okay, you can see if I zoom into it. Let me zoom into that section. I'm going to call out the section that I want you to pay attention to, the vertical line into red, so you may know exactly what I want you to see for this IBM stock. Okay, so if you are an investor investing in IBM, you want to know the IBM market cycle. Okay? Pay attention to the vertical line. Okay, all right. Hold on, please. I'll get there. I want to zoom into it so you can see clearly. Okay, here we are. So you see the two vertical lines from 1982 to 1992. That's 10 years, yes or no? So what has happened here? Okay, pay attention carefully. The stock start going now from the level of $12, call it roughly $12, and it start going up. It's going up from $12. Okay, IBM went up to okay, $43. So it will be great to buy here and hold from $12 and cash out, okay, at $43. Great investment, isn't it? So, all right. And then the stock, okay, so if you do +5, it will be 87. So after 5 years, you stay in the market as an investor, you buy and hold for 5 years, so midpoint. You can see that midpoint, 87, here, this is the beginning of 87, the stock went up, but by the end of 87, which is right here, so this is the beginning of 87, end of 87, which is the end of 5 years period, this stock start going down. All right, start going down. People wondering what's so. If you were buying here and hold, you were wasting your time, because this stock got, in fact, 10 years cycle. From the starting point, you go up for 5 years, and then you go down for 5 years. A market cycle for, so from 87 plus 5, that's 92. You can see 92 has ended here. So 92, where I placed my vertical line, that's the beginning of 92. But the end of 92 is here. Look what the stock went back to. Here it is. From $12.43, the stock returned back exactly to $12.43 after 10 years exactly. This is the market cycle for IBM from 1982 to 1992, the stock went down for 5 years and went down for 5 years. So now you understand from the starting point to the starting point. We apply this method when we are day trading. You'll see on the 4-hour chart, the stock goes around, okay? You can do this, all right? Cycle point, go from one point A, and it goes up, and then you see it goes down, return back to the starting point. We draw a horizontal line there, we see this is a cycle point. Following our wave count guideline, we use the cycle point to identify also the first Elliott wave. So end of the 10-year, so if you understand this, you may say, okay, probably we may have the first wave starting from the cycle point. Yes or no? All right, so you'll be expecting a new cycle because one cycle has ended. So you will be expecting a new cycle here. If, remember, a bullish cycle will not start if the fundamentals are poor, if the company is not performing very well, they have a rubbish product, or they are crashing under competition, well, the price may be at a cycle point, but we will not have a bullish trend because the smart money will not invest in a company that is not innovative, all right? Combining the technical or the Elliott wave or the market cycle with the fundamental, Google Finance, Yahoo Finance. So 10-year is completed. This is why it has happened, okay? So I want to go back now. So from 1992, remember this is the end of 1992, so plus 10, okay? 92 plus 10, so we are talking about which year? 2002. Okay, now let's go back and see what has happened in the next 10 years for this IBM stock. Remember that when we were talking about cycle, okay, we are talking about what? Okay, from the starting point to the starting point, either 180 degree or minus 180 degree. When the stock goes down, okay, and return back to the starting point. So it's true, either it goes up and return back to the starting point, or it goes down, all right, and it goes back to the starting point. Cycle point. You see this a lot on a 4-hour chart, all right? Especially if you are TSTW24 trader, look for cycle point. Trends usually start from a cycle point. Okay, now, so let's see now from 1992, this is the end of 1992. Now we add another 10 year, okay? So that will be the end of 2002. So if I place my vertical line here, that's, you see this 02, that's the beginning of 2002. By the end of 2002 is here. Remember what I said to you at the beginning of the video? From January 2016 to January 2017. So from January 2002 to January 2003, that's the end of 2002. Yes or no? A yearly cycle. So from 1992 to 2002, that's another 10 years. All right, remember, this is the beginning of 2002, but that's the end of it, okay? It's the beginning of 1992, but this is the end of it, all right? So the new cycle that we are paying attention to, I'm going to color it now, okay, into pink, to please the beautiful lady that can count waves, okay, like a nigger. All right, this is to make you laugh a bit, okay? Cheer up, okay? All right, make you smile a bit, all right? Okay, so, because if you're fed up of my voice or my beautiful accent, do I have a beautiful accent? Okay, now this is to make you laugh also, all right? In London, we like to laugh a lot, okay? We make jokes a lot, okay? So now, we have another 10 years. Let's get serious, okay? Though, I want you to focus, but at the same time, we want you to enjoy the video, all right? You like YouTube? All right, smile, okay? So 10 years again, okay? 92 to 2002. That's another 10 years. So remember what I said to you. We have two types of cycle, all right? Don't forget it. One is from the starting point to the starting point. The other cycle, which is the Elliott wave cycle, all right, is from the starting point to the ending point. But at this time, the ending point is not equal to the starting point. So 1, 2, 3, 4, 5, 1, 2, 3. Multi-wave correction. This is an Elliott wave cycle has ended. But when traders are talking about cycle, they switch off. You don't want to switch off, all right? You want to know where, if you want to become an investor, or suppose you have some clients, which is quite a daunting issue. I hate to trade for somebody else, okay? In fact, I hate that. If you are trading for somebody and you lose their money, all right, you're under pressure, okay? Serious pressure. So that's why hedge funds, okay, smart money, investment banks spend more time hiding their activity in the financial market. They're under pressure, okay? So you need to understand what's going on, okay? So this is another cycle, okay? From the starting point to the ending point, where the starting point is not identical to, okay, the ending point. The starting point is not identical to the ending point, okay? This is an annual cycle. So let's check now. So we know the cycle, how the cycle looks, okay? Two types of cycle. So from another 10 years, look what has happened now, okay? Now the cycle has begun here in 1992, end of 1992, which means beginning of 1993, all right, up to the end of 2002, all right? So we have, pay attention to the pink vertical lines. So I'm going to try to zoom into it. Right? Because you are my friend, I'm sharing this with you. Normally, I should charge you for it, but I don't like to charge traders. Okay? I'll give everything for free on YouTube, in fact, all right? So here we are. So what we see here, we have an annual cycle. Can you see that? In 10 years. Can you see that? Okay. Are you getting excited now? Okay, here it is, a trending phase. How do you know a trending phase? The price will be in a rising channel. This is quite bullish. You see, it went vertical here. Boom, 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 boom. Okay, this is what we call a distortion. Okay, I will show you something very fast as I'm talking about it. This is my own proprietary trading tool. I talk about it on YouTube many times. Diagonal move, trader that have been following up for years already know this. Diagonal move, vertical move. What is the next bit? Return to the opposite diagonal. Okay? Here it couldn't go. This is what I call the opposite diagonal. It couldn't touch it. So which one do we pay attention to? This one here. This is my own proprietary trading tool. Here, look. This is if it failed to touch the opposite diagonal, we pay attention to this horizontal line, which is the intersection between the vertical and the normal progression. Look, boom, on the dot. Call me proprietary trading. All right? Now, this to make you laugh a bit. I'm serious. This is true. Okay? Diagonal move, that's the normal progression of the price. Vertical move is a distortion to a certain degree. If a correction begins, the price has a high chance to return to the opposite diagonal. Now, I talked about this a few times already, but I'm not going to dwell on this one. I'm going to move on. This is the opposite diagonal. If I color it now into pink, that's the opposite diagonal, okay? That's the opposite diagonal. But sometimes the price may not come and return the opposite diagonal. It will stop at the horizontal line, which is the intersection between the vertical and the normal progression. Look, boom, on the dot. It's great to know, all right? So you may be wondering, Joy, how do you know all this? Because I spent years watching charts, trying to understand what is happening in this messy market. And here we are, I'm giving it to you for free, all right? Okay, so we have an annual cycle here. Okay, I want you to smile, that's why I'm talking like this, okay? I want you to smile. Keep smiling, please. Okay, so we have a training phase, okay? So training phase in the language of Elliott wave, so we can go on now and start wave counts, okay? All right, the training phase was from 1992 up to beginning here, okay? Up to mid 1999, okay? That's the training phase. And then the correction has begun. You see the correction quite choppy here. Okay, blah, blah, blah. Looks like a flat correction. 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Is it? Okay, so then the correction began. Okay, so here it is. Trending fast, correction. But so remember what I'm trying to share with you here, the Elliott wave theory and market cycle. Two types of cycle from the starting point to the starting point. Another cycle, Elliott wave cycle, from the starting point to the ending point, where the ending point is not identical to the starting point. But remember that we can have 1, 2, 3, 4, 5 waves, and a correction will be a total retracement. So don't be surprised that sometimes an Elliott wave cycle can end at the starting point. I'm not saying that it's impossible, but generally we don't see it. Which means price go 1, 2, 3, 4, 5 up, and then the correction begins, bringing the price back to the starting point. It is possible to have that. Yes, it is possible. All right. But most of the time, most stocks that are very, very bullish, because I'm talking about bullish example here, will not bring the price back to the starting point, because if they have a strong fundamental, okay, they will not bring the price back to the starting point. Okay. All right. So we have an Elliott wave cycle for within 10 years. But look what's happened, my friend. An Elliott wave cycle is completed within 10 years. So, which means, don't think that this is by mistake. Don't think that it's just happening out of the blue. The smart money know that IBM has a 10-year cycle. They saw it here, it happened once. I can't go back more, otherwise I can show you more examples, but they know 10-year cycle, they know it. So another cycle begins here. Well, so let's see here from 1992 plus 5. So we bring us 97. So this is the end of 97. But you see, 5 years they didn't take profit. That bully, that Elliott wave cycle trend continued more. It went up more. Normally, after 5 years, so what I can deduct from my first observation is that if IBM, okay, after 5 years is pulling back a lot, there's a high chance that the stock will return back to the starting point. So this is just my own observation here. That's what I'm seeing here on this chart now, okay? So after 5 years, the stock did not pull back as such. So in that case, if after 5 years, I may draw the high of the first 5 years. So I can draw the line of the high of that first 5 years, which is somewhere here. And so I say, okay, normally this stock after 5 years should pull back. So in that case, if it goes above the high of the 5 years, and the fundamentals are solid, and the market environment is bullish, I will give it another chance, expect it to go up more. Okay, this is just a quick observation. But let's go back to the subject that we are discussing, Elliott wave theory and market cycle. So here we have a cycle for 10 years and an Elliott wave cycle for another 10 years. But remember what I said to you, that a correction sometimes is not straightforward as we can expect it. Okay, so we were paying attention to the price action between the two pink vertical lines, highlighting a 10-year period between 1992 to 2002. Are you with me? Great. Well, let's move on again. Let's add another 10 years to this stock and see what has happened. So from 2002 plus 10 is what? 2012. If I'm wrong, put in the comment section. Say, George, which school did you go to? Or say something, all right? So, okay. All right. I'm going to change the color of the vertical line that I want you to pay attention to. I'm going to color them now into orange, okay? Sorry, ladies, we need to change color. We can't use pink all the time, okay? All right, so orange is beautiful color, bright, okay? So remember, don't get confused, because if I put it here, where I put 0, you see 02? Can you see in your chart? Let's zoom into it, 02. That's the beginning of 2002. All right. Sometimes I repeat myself for new traders, okay? So some traders understand fast, but sometimes I need to repeat myself for new traders because this is teaching, okay? I do it on purpose, okay? So don't get upset. So end of 2002, okay, plus 10 years, that will be end of 2012. So here is the beginning of 2012 where my cursor is, and this is the end of 2012 on my chart. So let's see what has happened within that 10 years period. Am I correct? Have I missed something? All right. So an Elliott wave cycle is completed here, but this is what we are talking about. After that, what has happened? Okay, after this correction, what has happened? The correction didn't finish. We see this stock, again, try to begin a new cycle, went up. Where he went to, he came back to where? Say it, all right? He came back, he started going up from here, and he returned back almost to the starting point. This is, we can say this is a kind of cancellation, all right? So at this point in time, market participants will say, okay, an Elliott wave cycle is completed. We are likely to see a new cycle. Here it is, start going up, blah, 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 heading up, but failed to exceed the high of the, okay, the previous trend, but found a resistance right there and came back down to the starting point. So what is it telling us? That this correction here that we are talking about here in this session here was not finished. So in fact, now it becomes clear to us that since, okay, in fact I can put it now, mid 1999 up to 2009, okay, IBM stock was consolidating, okay, you see, between the level of 12579 and the level of 5509. Can you see? It went up here, down to 5509, returned back to 12579, and almost near 5509. Will you agree that this session here is a correction? If a correction is a difficult word for you, will you agree that this is a consolidation on the monthly chart? I think most traders will agree. Went down, went up, came back to the starting point. So this session here that I'm talking about, I can show you. Okay, let's highlight it. Okay, I'm putting a spot on top of that session. Okay, this session here, okay, is a correction. So though an earlier wave trend has ended at somewhere near mid 1999, the correction that has begun in 1999 did not finish. So people thought that the correction has ended in 2003. That's why I said to traders, the wave count is dynamic. We are going one step at a time. So at this point in time, what I will have said to traders, an earlier wave cycle has finished. We may have, okay, a complex correction if the fundamentals are not solid. But as the price start going up, we may say, okay, probably this may be the first area wave. Because if the second wave counts on the first wave, okay, we will restart counting wave. So this move has started here. People will be thinking, okay, a new trend has begun or a new cycle has begun at the end of 2002. But here it is came back down to the starting point. In fact, I can say that, okay, the price, okay, start going out from here, from the end of 2002, all the way to 2009 and return almost to the beginning. So we may say there was, after 10 years, we have a mini cycle. But that mini cycle, remember, from the starting point to the starting point is a mini cycle. But that mini cycle is a part of a bigger correction that was underway since mid 1999. Okay, so remember, following our guideline, we will be saying that the first area wave is beginning here. But the characteristic of the first area wave is that it should break resistance, what? On the left-hand side. But which resistance this one breaks here? Nothing. No resistance broken. This resistance, it couldn't. Finally, when it came near the resistance, it just come back down. I left you now that this is not a proper first area wave, but in fact, it was a correction, a complex correction that was taking place. So now it has ended here. So we really again from the starting point to the starting point. Now in 2009, my friends, I'm going to put another vertical line there, but I want you to pay attention to the orange vertical line, the 10 years period. Okay, look at the 10 years period. Okay, in 2009, the stock market begins. Okay, began. Okay, a new cycle. So price went up, or return back to the starting point, we will expect a new cycle here. This is a mini cycle in this session here. So price start going up. We say, okay, now the first area wave has begun, and take out all this resistance here. Okay, all right? Will you agree? Yeah, we will say, well, quite dynamic. In fact, trader may say, okay, this is this is a fast wave with a big question mark because it couldn't take the resistance, because we see now a bit of a pullback here. So we may say, all right, everything is working beautifully. Here we are. We say third area wave. What is the fourth? What is the fifth? Well, can you see the fourth? Can you see the fifth? All right, this is not about wave count. All right, we are talking about market cycle and area wave theory. Maybe something like that, okay? So traders definitely at this point in time will say that a new cycle is likely to begin here. But remember that between the two vertical orange line, we are within the 10 years. So during that time, the price went up, okay, right here, but come back to the starting point. What you need to do, because something has changed. Can you see what has changed, my friend? Look carefully. I want you to get this one once and for all so you start trading like a pro, okay? Yeah, the first two lines that we have drawn, you remember the red two, okay? From here, from the starting point, 1982 to the end of 1992, 10 years. Price went up from the starting point to the starting point, okay? Now another 10 year for 1992 to 2002, 80-year cycle, multi-wave, correction. Okay, are you with me? All right? Are you with me? Now we put in place another 10 years. So we are projecting the time. So we will say end of 1992 to end of 2012, the IBM stock has a high chance to complete another cycle, either from the starting point to the starting point or an annual cycle. We know that. We know the two types of cycle. We know he's going to do one of those, okay? But what we have seen, pay attention to the two, because I have... But look what has happened. During that 10 years, our latest 10 years between this line, vertical line, and this one here, something has changed. Can you see it? The price went up from here, okay, to end of 2002, but almost went back to the starting point in 2009. Why? Generally, sometimes, though IBM has its own cycle, it has been influenced from 2007, in fact 2008, we know the bearish season, 2008, the market has caught up with IBM. I need to remind traders that the reason why I'm using IBM for this demonstration is because IBM is a market leader for the Dow Jones Index. All right? So the market leaders command the indices. All right? They are the heart of the trading triangle. All right? You know that? The market leaders propel the indices. So if you're trading indices, you want to know the market leaders that are propelling, okay, that stock index. Okay? So in 2008, the global financial market became bearish. So IBM was attempting to complete its normal cycle, the 10-year cycle, but it was caught up with the global recession from 2007 to 2008, the financial crisis forces IBM International, IBM, stock to come back down. This is what has changed. So you can see that though we have normally for IBM 10-year cycle, something has changed in 2008. The stock went down. Okay, so we have a mini cycle. This is an exception. That's why I put a black line here. So what we need to do now, my friend, because it has been stopped, okay? It has been stopped, okay, during its cycle, all right? So the cycle should end here, my friend. Do you agree? But it has been stopped on the way up because of the global recession. Are you following me? So therefore, the cycle that was starting here restart here because the price returned back to the starting point. I know that for some traders this subject may become a bit complicated, but just take it one step at a time. Sometimes you may hear something for the first time, you may think that it's too complex, but it's not. You just need to familiarize yourself with the subject, take it one step at a time, and by the time you know, it becomes clear to you. Sometimes we may be discussing a subject, a trader may think that that's a useless subject, mark the video down, or say something crazy. But over the year, that trader may see may recognize that, okay, what we were saying here make more sense. People change. And as a trader, you will also change. And you will learn over time. So if it doesn't make sense to you, just, okay, blink, 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 all right. I just say, all right, okay? So the cycle that has begun in 2000, end of 2002, say in fact beginning of 2003, supposed to end in 2013, has been stopped on the way. So the cycle has started again. So that cycle in 2003 was cancelled. Will you agree? Okay, we have a mini cycle from the starting point to the starting point. So this is a cycle. Do you know? This is a cycle. We talk about it. From the starting point to the starting point is a mini cycle. So for Microsoft stock, why am I talking about macro stuff like this? We are talking about IBM. Okay, correction. IBM stock, not macro stuff. Okay, so 10-year cycle completed, okay, from 1982 to 1992 completed. Area way cycle from end of 1992, in fact, beginning of 1993 to the end of 2002. An area way cycle is completed. Now, a new cycle begins here, supposed to end, according to our previous observation, supposed to end in 2003, but was caught up with the global recession. Okay, so we have a mini cycle where the prime went out from here all the way here, only to come back to the starting point. This is, okay, the continuation of the correction that we have seen in this session here. So we have a mini cycle for IBM stock from, okay, 2003 to 2009. This is a mini cycle, is an exception. All right. Now, a new cycle has begun for IBM stock in 2009, like the market itself. And now we can say clearly that, okay, this stock, okay, because it has normally 10 years, okay, 10 years cycle, we will adjust our line. The line that we put here, 2003 to 2013, we need to move that line back to 2009 because we have a mini cycle here. So the smart money will start saying that, okay, IBM got another 10-year cycle, okay, my friend? So you have to understand that companies also change depending on the competition and what's going on in their sector, okay? Now, it does not mean that a stock that has 10-year cycle will always have 10-year cycle. But it is great to know, okay, that a stock did have 10-year cycle. And if there is a change, we may be able to pinpoint the change. Because if you are a long-term investor in IBM, you want to know the cycle. So here it is, you see a 10-year cycle, stock goes up for 5 years, goes down 5 years. If he exceeds the high of the 5 years, it has a high chance to continue to go up, forming an annual wave cycle. Okay? Then we have a mini cycle here. So our new 10 years, instead of beginning of 2003 to 2013, we will set a new, okay, all right, a new period for IBM that will be from the beginning of 2009, okay, plus 10, up to the end of 2019. So this is the beginning of 2019, or this is the end of 2019. That's it. That's the new cycle. But let's keep our eyes on the price, okay? So here we are. We have a cycle. Because of our previous observation, normally this stock has, okay, 10-year cycle, okay? But something has changed here where we see that the stock completed a mini cycle from 2003 to 2009. So that's 6 years. Within 6 years, we got this funny cycle or strange cycle, a mini cycle of 6 years. All right. So what can we say? We can say that, okay, we need to be careful, pay attention to 10 years period, but be aware that there was a cycle that only lasts for 6 years. So as we start putting a new boundary for the new 10-year cycle, 2009, we will also pay attention to, okay, the 6-year cycle and see whether a new cycle is completed after 6 years. So 2009 plus 6 is what? You get it right, okay? 2016, this year. Are you with me? Because normally it's 10 years, but we see a 6-year cycle. All right, this is this one here. So we will say either 10 or 6. Normally 5, okay? And if it goes above the high of the 5 years, it may continue. Okay? Are you with me? So let's be, so 2016, this is 2016, yes or no? All right? Okay? All right? We are still in 2016, so 2016 will end here. at the beginning of 2017. So this is the new line here. So what am I saying, my friend? I'm saying to you that this stock, okay, it has normally 10 years market cycle. But from 2003 to 2009, we see a strange cycle that lasted only 6 years. That mini cycle is a part of a complex correction. So therefore, instead of focusing only on 10-year cycle for IBM, we should also be aware of the 6 years period. Okay, so I'm going to place another line there, and I'm going to color it, okay, into red. Okay, pay attention to the red line. But remember, let's clear this line away. So are you getting the message? So we are talking about Elliott wave theory and market cycle. All right, don't get confused. All right, so the 6 years will end here. Well, so between the vertical orange line here. Am I in the right place? That's the wrong place. Okay. Here it is 2009. Okay. So beginning of 2009 plus 6, 2016, end of 2016. That's what the 17 is here. So that's 6 year period. Look what's happening so far. What has happened so far within that 6 years? We know that the bigger cycle is 10 years, but the mini cycle is 6 years. Within that 6 years, this stock, you can see, can you see something else? Can you see another cycle, my friend? From the starting point to the starting point. I want you to understand this. From the starting point to the starting point is a cycle point. It's a cycle. The Elliott wave cycle, multi-wave correction. Okay? So here it is. You see, the stock went down in 2008 up to the end of 2008. And then it went up up to the end of 2009. And then it pulled back a bit here. Can you see? Will you agree with me that this is another mini cycle here between 2008 and 2009? Price went down and went back to the starting point. Will you agree? All right. So this is a market cycle. All right. Are you paying attention? From the starting point to the starting point. Will you agree? So now, at this point in time, because it's from the starting point to the starting point, we will expect a new trend at a cycle point. So the level of 12579 is a cycle point for IBM stock. All right? There were other cycle points before. The level of the first level that I show you here, okay, the turquoise line, $11.71 from the starting point to the starting point. Call it $12, from the $12 to the $12, okay? And then we have an Elliott wave cycle where the beginning is not equal to the end. Then this mini cycle, okay, from the level of 5509 almost to 5509. So if you accept that it's almost, you may say that 5509 is another cycle point. So $12 cycle point, $55 is a cycle point. Now we have again another cycle point here at $125.79. So look, price went down and returned back to the starting point. Okay, minus 180 degrees. But look, from this cycle point, what the price did, so we are here now. We are here. From that point onward, after it pulled back, what the price did, after the pullback, so price went up, and where it's now? Again, at the starting point. My friend, if you want to become a smart investor, or you want to trade like a pro, or you want to understand, okay, what is happening in the financial market, you must learn the Elliott wave theory and the market cycle. So here it is, the stock of IBM went up again from this cycle point 12579, went up all the way to the level of $215. Where he went back again? He went back again to the starting point. This is a cycle point. So looking at what is happening now, my friend, what can we say to traders at this point? We can only say to traders that, okay, there's a high chance that a new cycle may begin here. But remember, we have a cycle of 6 years, so this is the limit for 6 years, 2006. So one should wait for 2016 to be closed first, because we have another mini cycle within that 6 years period, but the bigger cycle is for 10 years. So it looks to me that since the beginning of the millennium, 2003, okay, you see here, IBM cycle is changing a bit from 10 years to 6 years. Now, are we going to have a new cycle at the end of 2016? Because the end of the 6-year period is the end of 2016. Before we close this topic, I want to highlight something to traders. You also know that when we are talking about cycle point, traders should also, especially going from the starting point to the starting point, so they must remember also chart pattern that we call round bottom or cup and handle chart pattern. I need to mention that. So as you see here, the price went down and went back to the starting point here, even here, okay. Traders, professional trader will measure the height of, okay, the cap or the round bottom. So if I use this measuring stick, went down, went back to the starting point. If I use this measure stick, they will project it at the top here to set a target. Look where IBM has changed direction. So one should combine, okay, the round bottom, the cap and handle chart pattern with the market cycle when the market cycle is from the starting point to the starting point. So here, though we are area wave traders, if you see a cycle point like this, think of a round bottom or a cap and handle chart pattern. This was the key here. Price went down, returned back. A price tried to pull back near the 50% Fibonacci retracement level of the cap. All right? From the starting point to the starting point, remember the cap and handle chart pattern and the round bottom chart pattern. So if we apply Fibonacci retracement level to the height of this round bottom here, we down, and to the starting point is round, okay? Going round is what it meant. From the starting point to the starting point, it's like going round. So you can see that the price, this leg looks to me like a handle for a cap, a handle. So the price went down, okay? In fact, I placed my ear. All right? Are you following me? Okay? So the first thing that is coming to the mind of traders, so when we see the price going around, so it went up like this and come back down, it has a high chance to form a handle. The handle can go, it's a contra trend, so price went up, pull back. You see it try to go up to the 50% Fibonacci retracement level or 61.8% Fibonacci retracement level of the cap. So if it goes like this, up and down. So now, as you can see here, it went down like this and went up like this. And then it formed this handle here, which is in the zone of 61.8% Fibonacci. Are you with me? The 61.8% Fibonacci retracement level of the cap. All right? And then from there, if the price goes above the neckline of the cap and handle or the round bottom, professional trader will measure the height of the cap and project it to the upside. One can combine the market cycle, the area wave theory, with the cap and handle and the round bottom chart pattern, even if we can count it area wave to set a target for the end of the fifth wave or the end of the trending phase. What do I mean by that? I want you to understand this once and for all. I've been talking to you now for a long time. It's now almost 50 minutes. Thank you for watching. That was not my intention, but I believe that this subject is so important that I should continue to explain everything instead of cutting it short and go away. So I will finish it off, okay, if you allow me. So suppose you were here, price at a cycle point, following our guideline, we will expect, a new trend or a new cycle. So if the trend starting using this projection, we give you a bit of idea where the trend is likely to end. So professional knew it, so they will put a line there and say greedy bullish target 19580. All right, let's color that line into red. From here we are. As soon as the price start going up, they know that the price has a high chance to go here. But if the fundamentals are not solid, the price will not reach the target. But they will also set a midpoint target, which is half of the target in this zone, somewhere here. That's the midpoint target. All right. So the ultimate target in the zone of 19580, midpoint target in the zone of 15965. As the price start going up here, okay? As you see, price went up above the target zone, form in fact a triple top. Well, a triple top means that people are selling. Right? When you see a triple top, just think of it that people are selling. If you see triple bottom, know that people are buying. Okay, so people were selling here. They were all the place here to sell. All right. So, but the target, the price is at a convergence point. So we are at a convergence point, and we see a bearish chart pattern. Well, wait for if you don't know what to do, wait for the first lower high. Here it is. Okay. If you don't know what to do, wait patiently. So nice kaput, tall candle down. Okay? Alright? So, talking about a cup and handle, I think you are not paying attention carefully to what I'm saying. So now here we are. Within the last 6 years, okay, the price, you can see here, from this V and from another inverted V chart pattern. A V pattern, an inverted V pattern. Or a round bottom, an inverted round bottom. So what is the expectation now? Okay? All right, what is the expectation? So we are talking about market cycle, we are talking about area weight theory, we are talking about, okay, target zone. So here, professional, once again for IBM, will measure the height of the curve. And if the bearish momentum continues, which means, okay, they are not competing very well, all right? A bearish target doesn't mean that this stock is going to go down, okay? Bearish greedy target, $42, I doubt it, okay? I doubt it, all right? And midpoint target, somewhere in the zone of $82, I doubt it. But another thing that we cannot forget is to apply again Fibonacci retracement. What am I talking about? The handle. The cap and handle. So we have now the cap. There's a high chance that we may see a handle forming up. So we apply what? Fibonacci retracement. So which level should we watch? The 50% Fibonacci retracement level is the first level. So this move going up may form, okay? May form, okay? The handle, bringing the price into the zone of 170. 50% level. Now, the two levels that we should pay attention to are the 50% Fibonacci retracement level and the 61.8% Fibonacci retracement level. So, if the handle is developing, it can go up all the way to this level here, 18087. All right? 18087, that is 61.8% Fibonacci retracement level, or this new cap or new cycle from the starting point to the starting point. 18087, 50% Fibonacci retracement level, 17021. All right? But does it mean that we'll definitely have a handle? The price may continue to go up and like this straight line. So what are we talking about? We are talking about, okay, using a market cycle to time the market without assuming anything. One must find a trading setup, okay, and apply a top-down trading method to trade it. By understanding the market cycle, one can time the market and profit in the financial markets. As you can see here, if one understands that IBM has a 10-year cycle, one can time IBM carefully and buy and hold. And one should also know exactly when to sell and when, okay, to re-enter the markets. All right. If you have any question, please put in the comment section. All right. You have any suggestion, put in the comment section. And in due course, all right, I will record another video to answer your specific question. My apology to trader. That was not my intention. That the video is too long, but considering that, okay, the importance of the topic that we are discussing, I cannot cut it short. All right. So I would like to thank you for watching this video, and I hope, okay, you will find it useful, okay, to make to your excellent investment and trading decisions. We are the TSTW24 traders talking about Elliott wave theory versus market cycle. The Elliott wave cycle is formed of the multi-wave and the corrective phase. The beginning is not equal to the end in the case of the Elliott wave cycle in most cases, but can be equal sometime. But talking about the Elliott wave cycle, the correction phase can become a bit tricky. Sometimes we have what we call a complex correction. That was the case for IBM. We see that Elliott wave cycle, okay, was in place from, okay, but this lot of traders thought that the cycle has ended, okay, at the end of 2002, but that the correction has ended in 2002, but we have a complex correction. Generally speaking, when we are talking about market cycle, is from the starting point to the starting point, all right? Whenever one is using a cycle that is from the starting point to the starting point, one should also remember, okay, the cup and handle chart pattern, the round bottom chart pattern, and a V, okay, a chart pattern. Until the next time, enjoy yourself and be very happy. Speak to you soon.